Welcome back to Investing Talk Podcast.
Today we're looking at DataVault AI.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Right. And with this one, it's a story of really incredible potential, but at the same time, some pretty sharp financial pressures.
It really is. It kind of encapsulates that whole high-risk, high-reward nature of scaling up an enterprise AI company right now.
Absolutely. So for anyone who hasn't been tracking this daily, let's just start with the headline. How much did revenue actually jump? What's the story there?
The top-line growth is, well, it's staggering. If you look just at the Q3 2025 results, revenues surged 148% year over year.
148%.
Yeah. It brought them up to $2.9 million for the quarter. And the key thing is where that's coming from. It's their core operations, the acoustic science and data science divisions.
Got it. So it's not some one-off thing.
Exactly. This is where the market's getting excited.
And the future guidance seems even more aggressive than these past results. It suggests a huge ramp-up is, already happening.
Management confidence is just extremely high. They've raised their revenue guidance for the full fiscal year 2025 to a minimum of $30 million.
Wow. So that implies a massive fourth quarter.
A huge leap. And if you thought that was aggressive, their guidance for fiscal 26 is over $200 million.
$200 million?
Yeah. They are betting everything on converting these pilot projects into big, high-value, license-based recurring revenue contracts.
And analysts are clearly buying into that narrative, right? They're calling the company a leader in AI-driven data experiences.
They are. The expectation is that as these high-margin licensing deals get locked in and they scale globally, you're going to see a huge expansion in their profit margins down the line.
Okay, but that potential is only possible if they have some kind of real competitive advantage, a moat.
Right. And they're building a pretty serious structural one. In enterprise data, switching costs they're crucial. Once you're embedded in a client's system, it's really expensive and complicated for them to rip you out.
So it's sticky.
Very sticky. And on top of that, they've got their own proprietary IP, especially in spatial and multi-channel wireless transmission tech. That combination is really tough for a competitor to replicate.
So let's talk about strategic differentiation. Where is this revenue actually going to come from? We have to talk about the IBM partnership. How important is that really?
Oh, it's critical. That IBM Platinum Partner status, it's like a stamp of approval for the enterprise world.
It gives them credibility.
Instant credibility. And their integration with WatsonX.ai is the key. It positions them for, massive adoption. IBM isn't just a logo on their site. It's a distribution channel straight into the Fortune 500.
So it's deeper than just layering their software on top.
Much deeper. They're using their data expertise to basically clean and structure all the data that feeds into the WatsonX AI models. They ensure governance, quality, everything. They become the foundational glue.
So they get a piece of every big AI deal in that IBM ecosystem.
That's the play.
Now, what I found really interesting was their longer-term vision, this first-mover advantage in real-world asset tokenization. Can you explain that? It sounds like it's a completely different business.
It is, and that's the real, asymmetric bet here. What it means is they're using their data and AI tools to structure huge, previously illiquid assets. The example they gave was like a specific claim on mineral reserves in Africa.
Okay, so turning physical things into tradable digital contracts.
Exactly. So they're not just selling software licenses, they're creating the actual infrastructure for a new class of digital assets.
And if they pull that off,
the upside just changes completely. It becomes way bigger than what a typical $200 million software company could ever achieve.
And all this is happening with these big secular tailwinds of AI adoption and data transformation behind them.
Right. All the potential is there. But, and this is a big but, we have to talk about the elephant in the room, this growth is being fueled by some massive losses right now.
Okay, let's pivot to that, the financial reality here, because the risks look pretty substantial.
They are. I mean, despite that incredible revenue growth, the company posted a huge net loss recently. We're talking $32.97 million.
$33 million.
But the number that really jumps out is the EBIT margin. It was negative 1,099.2%.
Wait, say that again. Negative 1,100%.
Yes, a negative 1,100% margin. It's staggering.
But what does that even mean? Are they basically paying $11 to make $1 in revenue?
That's precisely the implication. It shows they're optimizing purely for market share and R&D right now, not for profit. Their gross margin is also very low, just 6.8%. They're just paying a very high price for growth.
And that kind of spending has to put immense pressure on the balance sheet. What are the concerns there?
The biggest one is liquidity. Their current ratio is below 1, I think as low as 0.47, and their total debt has gone up.
So a sub-1 ratio means they might struggle to pay their bills over the next year without new money.
Correct. And their free cash flow is still deeply negative because of all that spending on expansion and R&D.
And we saw them go out and get that money recently, which brings up dilution risk.
Exactly. There's a big capital raise back in October. They sold 5.7 million shares at really low prices, $0.34 and 47 cents per share.
Ouch. That's a classic dilution event for existing shareholders.
It is. We also saw some insider selling in November, the CEO and spouse, but it's important to note that was non-discretionary. It was to cover taxes on vesting stock awards.
Right. Still, the bottom line here is that the ultimate risk is all about execution. The market is giving them money based on faith in that $200 million target.
That's the entire bear case in a nutshell. If they fail to execute or there's any delay in landing those huge contracts, the stock could get re-rated downwards, violently.
Okay, so let's transition to how all this tension is playing out in the stock price itself.
Well, as you'd expect, it's extremely volatile. Over the last 3 months, it's been in this huge trading range, a low around $1.02 and a high up at $4.10. It just closed around $2.55.
What's interesting, though, is that trend shift after the Q3 results. Even with the losses, those revenue numbers really changed the market's mind.
You did. We now have confirmation of a near-term bullish trend. The stock is trading well above both its 50-day moving average, which is around $1.75, and the 200-day, which is down at $1.02.
So that shows institutions were likely buying after that earnings report. What are the key levels we should be watching?
Okay, so resistance looks pretty strong at the $3 level. That also lines up with a few analyst targets.
Right.
And then the next big psychological hurdle is that 52-week high, up at $4.10.
And what about on the downside? Where's the support?
It looks like firm support is holding in that $2 to $2.20 zone. It suggests that while traders might be taking profits near $3, longer-term investors are stepping in below $2.20.
And what about the analyst consensus? With this kind of risk-reward, I imagine it's all over the place.
It's a huge range. The price targets go from $3 all the way up to $7.
Wow.
Yeah, and that wide range tells you everything. The market is pricing this for two extreme outcomes. Either it fails or it succeeds monumentally. That $7 target is completely dependent on them hitting that aggressive growth plan.
So given that, let's talk catalysts.
Yeah.
What are the confirmed events you need to be watching in the next 3 months?
The big one is the Q4 earnings report. It's expected in February 2026. That report is absolutely critical for validation.
They have to show that ramp-up is real.
They do. We're also anticipating some potential partnership announcements, maybe in acoustic science, or this is the big one, any progress on those asset tokenization projects.
And there's that webcast coming up in December, right?
Yes, everyone should mark that down. That's where management will hopefully give more color on their sales pipeline and, address those liquidity concerns we talked about.
Okay, so that's what we know. Now let's get into the speculation. What's the buzz? What are the rumors?
The rumors are pretty hot around a couple of things. First, a potential strategic integration with another Tier 1 cloud provider, so not just IBM.
That would be a game changer.
It would instantly broaden their moat. Second, there are whispers of M&A interest. Private equity firms looking at their IP and their current low market cap and seeing a huge opportunity.
A buyout.
It's being talked about.
Yeah.
And finally, a potential uplisting to the Nasdaq global market. That would open them up to a whole new class of institutional money.
And any one of those catalysts could be what justifies taking on all this risk.
Exactly. That asymmetric upside.
Yeah.
That's how you get to a $7 stock price. It's because one of those huge things actually materialized.
So what does this all mean for you, the listener? The tension here couldn't be clearer. On one hand, you have this confirmed astronomical revenue growth and that massive $200 million target.
But on the other, you have this really concerning financial picture today. Negative cash flow, huge losses, and real short-term liquidity pressure.
It's a knife edge. So the final question for you to think about isn't just whether they can hit that software revenue target. The real explosive potential, the thing that could change everything, hinges on whether they can pull off that first large-scale, real-world asset tokenization.
Yeah, does that one move fundamentally change them from an AI software company into something more like a global asset management enabler? Keep that question in mind as you track the news.
We encourage you to keep monitoring those key dates, especially the Q4 earnings and that December webcast. Join us next time as we continue to analyze the biggest moves in the market.